Hello and welcome back to Explain the Charts. Today is December 25th, 2024, and we're going to be analyzing the EURUSD pair. Before we dive into the charts, let's quickly look at the current events. The recent economic news paints a somewhat mixed picture. Recent reports indicate that the Eurozone is experiencing persistent high inflation, and analysts remain concerned about the potential impact on economic growth. On the other hand, there is some optimism surrounding the expectations of future interest rate adjustments by the Federal Reserve, potentially reducing the interest rate gap between the Eurozone and the US. Now, let's turn our attention to the chart data. First, let's examine the daily chart. We can see several price swings and patterns that provide valuable insights into the pair's price behavior. Notice the clear uptrend in the past few months and how the current price action seems to be consolidating around the 1.10 mark. Zooming into the 1-hour chart reveals more details about this consolidation. This hourly chart gives us a closer look at the recent price fluctuations. We can observe that the price is moving within a defined range, indicating indecision and potential volatility. Notice how the price frequently tests both the upper and lower bounds of this range. Let's drill down further into the 15-minute chart to see even more fine-grained price movements. This high-frequency chart helps us to analyze the intraday market behavior. The short-term price action is quite volatile, indicative of active trading and speculative activity. However, we can still identify some support and resistance levels within this time frame. By considering the news and the chart data, we can make some informed predictions. In the short term, the EURUSD is likely to remain within the aforementioned range. A break above the 1.10 level could trigger a further rally, while a break below the 1.09 support could lead to a short-term decline. The likelihood of these scenarios depends heavily on the upcoming economic data and the Federal Reserve's actions. In the long term, the overall outlook remains largely bullish, depending on the economic conditions. However, it's important to consider the potential risks associated with economic uncertainty and global geopolitical events. To summarize, key price levels to watch are 1.10 resistance and 1.09 support in the short term. A sustained break above 1.10 would strongly suggest a bullish trend, while a break below 1.09 would indicate a bearish signal. Other things to look for include the reaction to major economic announcements, such as inflation data and interest rate decisions. Monitoring the overall market sentiment will provide valuable additional information. Remember, this is just an analysis, not financial advice. Always conduct thorough research and manage risk effectively. Thank you for watching Explain the Charts, and happy trading!